over to there. All right, that works. We want to do that one. Bring this one down to here. Oh, lovely, lovely. Hold on a second. We are almost ready. Almost ready. There we go. And that goes that way. That goes that way. That goes that way. All right, almost done. One more. Streaming. Do this. Uh-oh, no. Do this. No. There we go. There we go. There we go. And there it is right there. Boom. And almost ready. And here we go. Uh-oh, wait a minute. Hit this right there. That works. That works. That works. That works. Uh-oh, what do we have going on here? Why don't I see anything there? That's not good. All right, give me a couple of seconds while I work on things. Rambler, how are you doing? Yo, KG, what's going on? So what's happening here? Okay, start a poll. Yes, no. Okay. Okay. All right, I don't know what's going on here. Don't know what's going on there either. So why can't I see what's going on? Okay. All right, let's try this again. Why am I not seeing anything on there? Andres, kicking with me. I don't know. JP, what's going on? Jeff, Spike, Popo59, what's happening? Hertzen, what's going on? Okay, so why is this not working? Okay, let's get rid of that. Let's get rid of that. Let's try it one more time. There we go. All right, so let's try this way. Next. No, it's not made for children. Go live. And hypothetically speaking, it should be working just fine, right? All right, so, and there we go. All right, so now it is working. That one's working. That one's working. That one's working. That one's working. Oh, uh-oh. Uh-oh. Reconnect. Uh-oh, reconnecting. All right, I think we're ready to go. Are we ready? We need to fix this. So, let's do it this way. ExxonMobil right there. I think we're ready to roll. We are, uh-oh, unable to connect at this moment. Uh-oh, that's not a good thing. Johnny, what's happening? Larry, Jason, Lean, I don't know. How you been? Jessica King, I am wonderful. Jessica King, it's Dividend stock talk o'clock. I like that, that's funny. All right. Bill Engel, what's happening? Tim Logan, Kevin Young, Debbie, what's happening? Debbie McIntosh, cool. I Am Legend, back again, cool beans. All right, Rambler, I have a question about open interest in option chain. Starbucks just went sideways at 94, but there's so many open options at 97, but didn't even move an inch up. Why is that? Well, let's take a look. Starbucks will be the first one on the list today. SBUX. Here we go. Starbuckies. Ooh, doggy. Let's take a look at this thing. Bring this over here so we can get a better look at it. All right. Now, anytime I look at a stock, I'm always looking for 5 things. Uh-oh. Having issues with YouTube. Issues with YouTube. Hold on. Issues with YouTube. Okay. So anytime I look at a stock, I'm looking for 5 things. Are you ready? And they're simple. And it should take you 3 to 4 seconds to see all 5. Okay. How can you see all 5 if it only takes 3 to 4 seconds? Well, here we go. You ready? Number 1, the high. Number 2, the low. Number 3, where was it a year ago? Number 4, where is it now? And number 5, just take your finger and trace it. Sideways, up, down, up, down, up. Okay, that's what it's doing. Simple, right? So what do you think it's going to do next? Well, it's in an uptrend now. So usually in an uptrend, it continues to go up. So the question was, Starbucks just went sideways at 94. So let's go take a quick look at the last 90 days. Now, the reason why I want to take a look at the last 90 days, and the reason is specifically because I want to see what the other buyers and what the other sellers are doing. Because I'm not the only dancer on the dance floor. There's 7.9 million shares of Starbucks traded today. 7 million. So what's my 500 or 600 shares going to do? Absolutely nothing. Okay, so what's going on here? Okay, we're at 83 a month ago. We shoot up to 96. That's $13. Now, $13 on an $83 stock was right around 12%. So if this baby jumps up 12%, there's going to be profit taking. There wasn't a lot of profit taking because we have a new bottom right here just above 90. Okay, now she's going up 1 day, 2 days, 3 days to the upside. But look at where the 30-day high is. Is it possible for it to go higher? Yeah, there is. But you're not going to catch me doing it. Okay, profit here 30 days ago. Okay, I don't want to buy here. It's too close to the 30-day high. So I'll just watch Starbucks, and when it becomes more reasonable, ooh, that's a good one. When it becomes more reasonable, then I will think about jumping into Starbucks. But at this moment, I'm just going to sit and watch it. So the question is, just went sideways, but there's so many options, 9,600 open interest. Let's take a look at the open interest. To find that out, it's right here. Open interest, volume, implied open interest right there. Okay, so there's not that many open interest at the 94. There's only 2,600. That's not that many. Okay, think about it. 2,600 shares. Okay, now each share represents 100. Wait a minute. Each option represents 100 shares. So at 2,696, let's call it 2,700. Okay, 2,700. That's only, you moved over 2 more spaces, that's only 200,000 shares. That's it for the 94. That's only 200,000 shares. Well, 8 million traded today. Well, of course it's not going to be a huge difference. Now, you're wondering, why didn't the option price move? Because there's a lot of factors going into the option price. You got volatility. You got stock movement, you got time value, you got the Black-Scholes pricing methodology for standardized options. That thing is a complicated mess. If you take a look at the mathematical equation, it's called Black-Scholes pricing method for standardized option. And it is a huge mess. Why am I having an issue with YouTube? Now I got 3 YouTube channels. This one's working fine. That one's working fine. This one over here is not working so fine. Well, let's find out what's going on. All right, let's get rid of this. Don't need that. All right. Okay, get rid of that. We don't need that. Oh, bloody righty then. So that's Starbucks. Now, don't get me wrong. I like Starbucks, but I like Starbucks when the pricing looks about right. 30 days ago here, big jump. Now it's going sideways. Is it a new trading range? Or is there going to be profit taking that brings it back down to the 80 area? I don't know. Well, it's a wait and watch thing. Okay, so we'll just wait and watch, see what it does. Delta Airlines. David wants to take a look at Delta Airlines. Now, I don't think, does anybody know how often Delta Airline has increased their dividends? Okay, let's take a quick look. High, low, where was it? Where is it? Look at this, down, up, down, up. Now it's going sideways. Now, I hate sideways because it's not really sideways. It goes up, it goes down, it goes up, it goes down. But right now we're at 50.13. Does it look like a good opportunity? Well, it kind of does because you get the little upward trend right here in the last couple of weeks. At $50.13, what kind of rate of return am I looking at? Well, at the 50s, $2.24. Now, I know a lot of you can add pretty damn quick. So $2.24 on a $50 stock, that's over 4%. Kind of makes you wonder. 4%, well, you can double your money in less than 6 months. Well, that's pretty damn good if you think about it. But does it make sense? Well, let's take a deeper dive into the numbers, see exactly what it's telling us. So a year ago, Delta Airlines at 47. Okay, we drop down to 37, jump up to the high of the year, 69.98. And that was the end of January. That's the high of the year. Now from the high of the year, 69.89, thing drops all the way down below 35 in April. That's that TDS day. Okay, now some of you know what TDS day is and some of you don't. If you don't know what it is, look it up. TDS day, right there. The 7th, 8th, and 9th of April. Now from there, she shoots up, pulls back, up again, back down. Now look at this right here. That I want to zoom into this area and look at the last 30 days. Because for me, the last 30 days is a great opportunity because I'm only looking at 5 days. What is it going to do in the next 5 days? Well, tomorrow's Thursday. So options expire tomorrow for this week. And then we got options for next week. All right, so let's take a look at the last 30 days for Delta Airlines. Okay, so 30 days ago, we're at 48. We jump up to 52, drop down to 45, back up to 50. Well, from 45 bottom right here to currently 50, that's a $5 move. A $5 move on a $45 stock is over 10%. What is that, 11 or 12%? Is it going to keep going up? Well, think about it. If you bought something and in 2 weeks, okay, because this was 2 weeks ago, it was at 45. Now it's at 50. Now, I know $5 doesn't sound like a lot, but $5 on a $45 stock, well, that's more than 10%. That move right there. So is it going to be profit taking or is it continue to go up and challenge that 30-day high at 52? You have to ask yourself the question, do I like Delta Airlines? Do I like Delta Airlines at this current price? Am I willing to buy it, hold on to it, never sell it until it hits my target? Well, at this moment in time, it's at $50.13. So if I buy it at $50.13 and I sell the $50 option, I'm picking up $224. That's over 4%. Let's do one. Let's do a trade on Delta Airlines so you see how it works. Now, some of you might be new here. You might say, what are we talking about? Well, let me introduce myself. I forgot, and I'm going to apologize. First and foremost, my name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. Those are companies that have consistently increased their dividends for a minimum of 2 decades. 2 decades is 20 years. So the stock market's been around for over 400 years. The very first dividend stock was the VOC. That was the Dutch East India Shipping Company. Oh, I got a heart. Ooh, oh, that's a flower. Ooh, oh, and I got another one. All right, so anyway, the Dutch East India Shipping Company in 1602, the very first dividend stock company. They literally went door to door asking the peasants, the little people, invest in our company. We will give you a portion of the profits. We will share our profits with you if you invest in our company. So the VOC, the Dutch East India Shipping Company, reigned supreme for 198 years, and they averaged a payout of 18% per year. 18% per year in the 1600s and the 1700s. Well, that's awesome. Well, they did go bankrupt because of corruption and mismanagement. Think about it. You give some idiots a whole bunch of money and ultimate power, yeah, they're going to go corrupt eventually. And they did. Anyway, if you like Delta Airlines, that's the big question. Do I like Delta Airlines? Am I willing to hold on to it for however long it takes to hit my target? Well, if I'm buying it at 50.13, my target's going to be 50. Now, I know what you're thinking. Isn't that lower than what you're buying it for? Absolutely it is. But here's the thing. If I'm buying it at $50.13 and I'm selling it at $50 using a covered call, by the way, a covered call is one of the safest and simplest trading strategies there is. There are literally hundreds of videos available explaining how a covered call works. Okay? That being said, if I can collect $2.24 per share and then sell it at $50, well, I'm selling it for $52.24. Do I really care if the stock goes up? No. The stock can stay exactly where it is. Okay. Think of it this way. Stocks move three different directions. Okay? Up, nowhere, which is basically sideways, and it doesn't move at all, and down. So if I buy it at 50.13, I sell somebody the rights to buy it from me at 50. If the stock goes up, I make my money. If the stock stays the exact same, goes absolutely nowhere, I'm still making my money. And guess what? The stock can even go down 13 cents a share, and I'm still making my money. If it drops below 50, which it can do that, what's going to happen? I'm going to keep this $2.24 per share, and then the following week, I'm going to sell it to someone else for the exact same price I paid for it. Because every single week, there's a new option available to sell. And that's the reason I only do weekly options. All right, so let me briefly explain some of the rules. Let me briefly explain how this all came about. In 2008, right in the middle of the financial crisis, my daughter jumps on my lap and said, "Daddy, what are you doing?" Now, granted, my daughter was 9 years old at the time. "Daddy, what are you doing? Can you teach me?" Okay, so here's the thing. How do you teach a 9-year-old to invest in the stock market when most adults don't understand it? They don't. Most adults don't understand how to invest in the stock market. And here's my 9-year-old daughter asking me, "Daddy, can you teach me?" All right, so here's the issue I had. 5 criteria I had to overcome. Number 1, it had to be simple. Number 2, it had to be safe. Okay, the income had to be predictable and consistent. And then here's the kicker. Number 5, no way for her to lose. Now, everybody looks at me and say, "What do you mean no way for her to lose?" Well, all right, let me briefly explain what I mean by no way for her to lose. Okay? If I only invest in companies that have a proven track record of 50 years or 100 years or more. Okay, there are companies out in the stock market that are over 100 years old. There's a few of them over 200 years old, and they're still paying dividends. Now, first you got to understand what a dividend is. A dividend is a portion of the company's profits that they give back to us, the investors. We buy, we sell, we are entitled to a portion of the profits. That's why I only invest in dividend-paying companies, okay? Because they consistently increase their profits every single year. So when I say no way to lose, well, you could lose. Imagine, if you will, you wake up one morning and the headline news says, "Can you believe it? The earth opened up and swallowed every single Coca-Cola machine, every single Coca-Cola factory, and every single thing that said Coca-Cola on it." Is that possible? Well, depends on who you listen to. If you believe anything from the Warren report from the federal government, yeah, that's possible. But realistically, you and I both know Coca-Cola is not going to disappear anytime soon. Pepsi, same thing. Bank of America, probably not. Wells Fargo, been around for over 100 years. Companies that I'm looking at have been around for decades. Decades. Okay, there's one company called GPC, Genuine Parts Corporation. They have increased their profits for over 7 decades. That's 70 years. Are they going to go out of business and disappear? Probably not in my lifetime. So when I say no way for her to lose, okay, then maybe that might be something for her. So if I'm only looking at companies that are consistently profitable year after year after year after year for at least 2 decades, why not? Okay, so that's that. I'm going to entertain some of these answers, some of these questions, okay? So let's go back and see what kind of questions we got. Now, I do try to every single question, Okay. Now, when I first started, I only had like 2 or 3 channels. Well, I'm up to 9 channels now. So I'm live streaming on 9 channels. So that means I have questions coming from 9 different directions. So if I don't get to your question immediately, cut me a little bit of slack because I'm trying to get to all of them. And I probably won't get to all of them tonight, but I'll try my best. All right, so let's look over here. TikTok number 1. What kind of questions do we have? Let's float through some of these. People just stopping in and saying hi. All right, hi. Hi, sir. Please advise on Bristol Myers Squibb. I am legend. Let's take a look. BMY. Interesting. Ooh, really interesting. All right, let's take a quick look. You ready? The high, low, where was it? Where is it? Look at the motion. Up, down, up, down. Okay, so we're at 47.63. All right, so if I buy it at 47.63, I'm going to be looking at the 48s because it's the closest strike price. Wait a minute. No, 47.50 is. And that's going from 46 to 95. So yeah, I'd probably get my 1% there. All right, so the numbers look okay. The chart looks okay. That's the 1-year chart. Now I want to take a deeper dive and take a closer look to see, is it the right time to buy? Because every picture tells a story. And it should, hypothetically, take you 3 to 4 seconds to see all those 5 things that I'm looking for. So let's take a look. So a year ago was the bottom of the year, 39.35. Shot up nicely at 63.33 in the middle of March. Okay, the last 30 days are right here. Come on. So take a look. 30 days ago, we're at 48.50. We shoot up to 55.50, drop down to 45. Well, now we're at 47. So we got a decent bottom here, 1, 2, 3 times right here in the bottom. That's some pretty good support. And we have 1 day to the upside. So I like 2 days to the upside. So I'm going to hold back on this one, not jump into it yet. Maybe look at it a little bit later on during the week. Okay, so what else do we have over here? Over here. All right, right there. Okay, nope. More questions. What is your Instagram name, please? That would be The 10MinuteTrader. Okay, that's that one. Okay, we're going to hold off on this one. A lot of questions over here. Holy cow. All right, what do we got? La 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 la. Looking up these questions for me. Okay. All right, some comments have been filtered out. Yep. Jessica King, it's dividend stock clock out time. Jessica King, how you been? I've been wonderful. Thank you, Jess. Broken English, good evening to you. Back again, I see that. Broken English, 4%, not quite sure. Yes. 12, could you share if you could have? Okay. Broker do I use? I use Charles Schwab. Now this is Think or Swim. Okay. Now Charles Schwab has its own trading platform. Think or Swim is separate, but it is through Charles Schwab. Broken English, 400,000. Not what, I'm not 100% sure what you're talking about, Broken English, but okay. Sean, the market these days just pumps on low volume for no reason. Thank you, Sean. In 10 days, 40,000. In 100 days, 400,000. MSD, you're up 25% in the past 5 years. That's horrible in my humble opinion. Okay, so I'm looking at 1% a week. 1% a week in 1 year is 50%. You're up 25% in 5 years. Ooh, that makes me shudder. Okay, Icy. It's someone know what broker he uses. Okay, it's Charles Schwab. Odom, how are you doing, Odom? Gamma, this system does not work at all. Stocks incline, you get a sign. Stocks fall, big loss. Dividend, add, no add. Gamma, thank you for that. Blackacre Esquire. When selling covered calls, are we clicking on the bid or the ask in the call side? Oh, Blackacre, that's a good question. I want you to pay attention to something really close. Now, if you didn't know, hold on a second. Can you explain low volume pumps? I'm just lost. Sean, I'm going to be honest with you. I have no idea what you're talking about, low volume pumps. Okay? All the stocks that I do are dividend kings, dividend aristocrats, dividend champions, dividend contenders. Okay? If you look at the volume, almost every single stock that I trade trades in the millions of shares. Okay? I don't do low volume stocks. So I can't help you out with that question. All right. So, Gamma, I want to thank you for that. Because they say if you don't have enough turds in your life, you're not working hard enough. Thank you. Turd number 1 for the day. Awesome, Gamma. Black Acre, when selling a covered call. All right, I want to show you something. Now, for those who don't know, this screen here is live on YouTube. Okay, the 10-minute trader. It's being recorded as we speak. So if you have any questions, if you need to see these little tiny numbers, your best bet is to sit in front of your big screen TV and pull this up. Because you're probably not going to see these little tiny numbers on your phone or your iPad or whatever you're watching it on. Okay? So, as I was saying, when you're doing covered call, do you click on the bid or the ask? Now, Black Acre Esquire. Okay. When you take your cursor right here and move it around, all right? The calls are on the left side and the puts are on the right side. Now, I don't do with the puts. I only share one trading strategy. That's it. Just one. That's this one here. I only do the call options over here. Now, when you take your cursor right here, move it around, there's a little tiny box that opens up. It says buy. If I move it over here, it says sell. Now, I don't buy options because 80% of all options expire worthless. So I'm not an option buyer. I'm an option seller. So when I sell an option, this little square right here says sell, and that's in the bid column. Okay? Okay. Broken English. For me, it's 9,600 a day on, but for 100 days, it's 960,000. So it is $96 items. Okay, 4% is for you. Okay. There is no easy system. This is a scam. Again, Gamma, I appreciate all your negative input. Thank you kindly. Got to have turds in the world or life wouldn't balance out. Icy, he doesn't trade on his own. Okay. Courage more as a share. Oh, Terror. Terror wants to look at SoFi. Okay. Let's take a look at SoFi. SOFI. Here we go. Hell no. Wasn't that quick? Remember, I tell you, it should take you 3 to 4 seconds to view a chart. Wow, it's getting late in the day. Okay, so take a look. The high, the low, where was it? Where is it? Look at the motion. Up, down, up, out of my reach. I don't buy at the high. Takes me 1 second to see that. It's like, no, thank you. Because you get the bottom here, okay? And look at the big jump up. It went from 9 to 18. That's 100% increase. Now, if you think 100% increase, this is not going to be profit taken, hey, more power to you. I don't buy at the high. To me, it just doesn't make sense. Okay? All righty. Broken English, 36 remained. Okay, fine. Lovely. All righty. What are we looking at? Dun, 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 dun. If the stock moves a lot, do you check news on the stock? Nope. Jojo, I don't pay attention to the news, okay? I look at the numbers. I look at the cash flow. I take a look at who's buying, who's selling. It's not that difficult. A year ago, we were at $6. We jump up to 18. Okay, that's a 200% increase. Then we drop all the way down to 9. And then from 9, we jump all the way back up to 18, another 100%. So look at this. Got a 200% increase, pulls back, and then another 100% increase. Okay, so what are you doing? You buying low, selling high, buying low, selling high? I don't know. What are you doing? Or are you just buying and holding? I don't know. Everybody's different. Me, I don't buy and hold anything. Everything I own, I do a covered call against because I'm looking for cash flow on a weekly basis. No desire whatsoever to hold on to anything. And Jojo, anytime you buy or sell a stock, it's always going to be about the numbers. Club Med Tom. Hey, James, was the tax strategist from yesterday discussion shared? It was shared last night, but I didn't get anything. I didn't get the name. So I asked that person to share that information, and I haven't received it yet. So as soon as I receive it, I will put it into the Discord, and I will send it out in the email lists. All right. Infinite Sky, can you please look at BRKB? What the hell is that? Okay, BRKB. BRKB. Hell no. Okay, if the computer can't find the symbol, why am I looking at it? Sorry, dude. Kevin, sorry, did you answer the question about parking money if you don't have enough for 100 shares? Okay, Kevin, what I tell people just starting out who don't have enough for 100 shares, there's a strategy called dividend capturing. It's an easy strategy. It's one of the oldest strategies there is. You buy the stock, you collect the dividend, you move on to the next stock. But there's a few tweaks you need to understand about it because certain stocks move predictably every single quarter, every 90 days. So you got to pick the right stocks and you got to do it at the right time. Okay, but I don't discuss other trading strategies other than this one that we're doing right now. Jojo, if a stock moves big up or down, do you check the news on the stock? No. User 679638. Why can't your parents just name you Peter? Okay. Am I a millionaire yet? Not quite sure what you mean by that or how you want to interpret that because it's all in context. Or, yeah, context. That's the right word. So Bryson, BMNR. Bryson, what is that? BMNR. Bitmine immersion. Why the hell are you putting money into that thing? Oh, I see what it's doing. Okay, it's here. What is that, like 2 or 3? And then jumped up to 58? Well, okay. But it has no options. So as much as this looks lovely, okay, it's not something I would ever look at. I don't ever buy something I don't know and I don't understand. I never heard of this. Okay, and I'm just venturing a guess that they don't have 2 decades of consistent profits. Infinite Sky, you're welcome. Kevin, also, I sent an inquiry on your site hoping to talk soon. I'm going to have to look at that, Kevin, but I'm going to apologize. I'm at that point in my life where my mom's in and out of the hospital a lot, so she was in the hospital today. So there's a lot of conversation going on in the family, and I'm also preparing to go on vacation to see my high school buddies that I haven't seen in decades. Yeah, we graduated in 1982. That's a long time ago. Yeah, so we're going up to Maine tomorrow morning. So it's been a lot hectic, and I didn't read all my email today. Now, I read my text and whatnot, my TikTok text this morning. But if you didn't send me a TikTok message, I probably didn't get it yet. Did you say dividend capturing was another strategy? Yes, Greg. Dividend capturing is a strategy for those who don't have a lot of money because you can do dividend capturing with fractional shares. Okay, it's a whole different strategy. As a matter of fact, we're going to start a new website with my grandson. Okay, so now my grandson's 5 years old. Some of you have met him. Now, what we're going to do, me, my ex-wife, my son and my daughter-in-law, and then my in-laws, we're all going to take our spare change every week. What is it going to be? $2 or $3? Well, for me, $2 or $3. The ex-wife, $2 or $3. My son, a couple of bucks. My daughter-in-law, a couple of bucks. My in-laws, a couple of bucks. So you get all of us together. What do we get? $5 or $6 a week for my 5-year-old. So when he turns 18 in 13 years, what is that going to look like? Compounding every single week for 13 years. And then he's 18 years old. Well, for people who don't have a lot of money, that channel would be something to look at to see the possibilities. Because if you only if we only invest in good quality companies, Now, I'm not looking for something such as this, okay, where, the sun shines on a dog's ass once in a while, okay, where it goes from here and it shoots up. Because what is this? It's less than, like $5, and it shoots up to over 70? Why? And how do you find that? That's not something that's easily found. So yeah, once in a while, some people find it. Paul Rod, I will share the tax strategist information tomorrow. There you go. There's your answer. So Paul's going to share the information on the tax strategist tomorrow. For those of you in the morning trading group, we'll get that to you tomorrow. And then it'll be in the Discord also. So let's keep on keeping on. What are we at now? Is that something from JoJo? Where was JoJo? I just saw it. JoJo, there we go. Okay, China, I have no idea who you are. All right, JoJo, they're probably talking about Berkshire Hathaway. Yeah, Berkshire Hathaway has monthly options. They don't do weeklies. Which 3 dividend stocks would you suggest for starters? Ooh, find something in the Dividend Kings, Dividend Aristocrats, Dividend Champions, or Warren Buffett's list. Okay, those 5 lists will give you at least 300 decent companies that have consistently increased their profits. Why not? Okay. Paul, thank you. BBAI. What is BBAI? BBAI. Okay, I never heard of this one. Okay, so I have an issue, okay, with stocks that are $1 a couple of months ago, and now they're up to $7.50. How can this company have 20 years of increased profits? How? It's less. It's like $1.50. Could it? Yeah, it could. But is it? BBAI. So let's go check a look. Now, I always tell everyone, if you're going to be investing, you really, really, really need a financial website, whichever one you want to use. Okay, I like Yahoo Finance. Okay, now I've been using Yahoo Finance for over 20 years. Fine, so let's see what Yahoo Finance has to say about BBAI. Okay, so, okay, BBAI. Now, I probably have a good idea. It's probably going to be a no because I've never heard of it. All right, so dividends only. Okay, so here we are at Yahoo Finance. Historical prices, and these are the dates. Well, I want to look at all the historical prices because I want to see how often does this company increase its profits. Okay, historical prices, dividends only, and just what I thought. There are no dividends in the selected time period. So why am I looking at a stock that has no dividends if the name of the show is Dividend Stock Talk? It's right there in the name of the show, Dividend Stock Talk. Well, this company has no dividends, so why am I looking at it? Odin, 1% is enough for me. I'm stayed, not gambler. Okay. Did you answer my tax question? Boogeyman, so many questions run through here. Remind me again, what was your tax question? All right, all right, all right. Dorothy Ellison, did you? Okay, now, Dorothy, I don't mean any disrespect whatsoever, but I got 1, 2, 3, 4, 5 channels with questions, not including the ones down here. Okay, did I what? Okay, nothing that makes 1% a week could be described as safe. Okay, Jay King, do you want to expand on that? I mean, you're making a statement. I'm going to respect your statement. So nothing that makes 1% a week can be described as safe. Great. Prove me wrong. I got no problem whatsoever. Okay? So let me think. Hold on a second. What is a good company to do? How about Macy's? Jay King, what do you think? Macy's? That's been around for over 100 years. Or how about Kohl's? They've been around for a while. Let's take a look at Macy's. Why not? All right, Macy's. Here we go. Ooh, look at that chart. Isn't that lovely? The high, the low, where was it? Where is it? Look at the motion. Down, sideways, right here at 1248. Oh, come, think about it. 1248. 12.48. What's the closest strike price to 12.48? 12.50. All right, so what's the 12.50 going for? 12.50 is going for 31 cents per share. Now, I'm not 100% sure if you would call Macy's a safe bet. I mean, they've been in business for over 100 years. The name is almost worldwide known. Okay, hold on over here. I'm going to answer that question in a minute. So think about it, Jay King. Okay, the company has been around for over 100 years. All right, it's been in many movies. Everybody knows who Macy's is. So let's take a look at Macy's. Here, what 20 bucks a year ago? The bottom of the year is 10. That is a 50% drop in price. So why am I buying it? Well, I'm buying it because Macy's is one of the most profitable companies I've ever invested in. Isn't that weird? Because look, it was at 20, now it's at 12. How can that be profitable? Because it depends on how you invest in it. Let's take a quick look. Now, if I'm doing a covered call, simple, safe, predictable, consistent, let's find out. All right, last 30 days. Here we go. 30 days ago, we're at 1140. We jump up to 1260. We drop down to 1060. Well, now we're at 1248. Now, you may think that's not a lot, but from 1050 to 1248, that's $2 move. Think about it, $2. That's not a lot of money, but $2 on a $10 stock, that's 20%. So if you buy at the low, okay, and it jumps up 20%, are you going to hold on to it or are you going to let it go? Choice is yours. But let's take a look at the covered call, if I did one tomorrow, using Macy's. Company's been around for over 100 years. Could it disappear? Yep. The earth could open up and swallow up every single Macy's there is. There's a Macy's right down the street in Sarasota. There's a Macy's in Boston. There's a Macy's in New York. There's a Macy's in Chicago. Yeah, the earth could open up and swallow up every single Macy's. Could. It could happen. All right, so let's take a look. Let's do a covered call on Macy's to see what percentage that is. Okay? And, whoa. Okay, so J. King, nothing that makes 1% a week could be described as safe. So for the past 15 years, you're saying everything I do is incorrect and not safe. Okay, so do you think 16 years or 17 years it'll turn around and I'll start losing? Because I've been doing rather well for the past 15 years. But we are going on year 16. So maybe I'll start losing in year 16. Because we know 15 years of success can't keep going on. Maybe, I don't know. Well, let's check it out. 1250. Well, here we go. Let's get rid of that. First thing I want to do is I want to change it to covered stock. One thing I love about Thinkorswim is it does everything for me. Click of a button, it changes everything. Well, great. There it is, 1250. That's the price right there. All right, so let's take a look. Need to calculate. I need my glasses for that one. 1250 right there. Now, I'm going to do just one contract. That way you get to see the numbers. Market order. And here we go. Now, here we go. Here's what the order should look like and sound like. By one, covered call of Macy's 100. That's the weeklies. 11 July 25. That means this option trade is going to expire 3:59 p.m. next Friday. So whoever buys it from me has between when I buy it, when they pay me for it, and Friday, next Friday at 3:59 p.m. Okay. So the $12.50 call option against the Macy's stock at the market to open to open. Now, I did not stutter, and no, I did not repeat myself. To open means there's two trades. We're buying the stock, that goes to New York. We're selling the option, that's going to Chicago. What am I making? Now, remember when I said simple, safe, predictable, consistent? Well, let me explain. Simple, okay? A covered call is one of the simplest and safest trading strategies there is. There are literally hundreds of videos telling you how to do them, what they're all about, what the risks are, what the rewards are, blah, blah, blah. Okay? Do your research. Now, the covered call is so safe they say, you can do it in your IRA. Poet didn't know it. So seriously, it is one of the few trades you can do in your IRA. All right? So, what am I looking at? Okay, so I'm buying the covered call. The maximum profit for this particular trade is $36. Now remember why I said predictable? Well, I know what I'm going to make on this trade before I even do it. So before I send this send button, okay, because then as soon as I send it, it goes to the market maker and then he fills it. Well, before I hit that send button, I want to make sure all the numbers work. Remember rule 5? Make sure all the numbers work. I'm not talking about just the charts. I'm talking about the math. What am I buying it for? What strike price am I selling? What am I collecting? Well, I'm collecting $36 for this one contract. Well, what's the one contract costing me? Well, the investment for this one contract is $1,214, $1,200. All right, well, let's get the calculator out and see what number that is. Because we all know if it's over 1%, it can't possibly be safe, according to J King 90. All right, so calculator. Move it over there. Okay. Okay, $36 is the profit. Okay, we're going to divide it by the investment. Now, you can look at it any way you want. The way I like to look at it is I am purchasing a cash-producing asset. Okay, I'm taking a big chunk of my money, I'm putting it into this entity, which just so happens to be Macy's, and this entity, this cash-producing asset, is giving me weekly cash flow. Okay, so remember I said simple? It's one of the simplest one. Predictable? Well, I already know what I'm going to make. Consistent? Weekly options. I can do it every single week. Week after week after week. There's 52 weeks in a year. I can do this 52 times because Macy's has options available every single week. All right, so this week I'm getting $36. Next week I might get 38, I might get 28, who knows? Because every single week it changes. Are you okay with that? It's all part of the game. If you buy a grocery store, if you buy a house, if you buy a vending machine, if you buy a car wash, you don't know what you're going to make every single week. Well, it's the same thing with stocks. They go up, they go down. Well, great. What is my covered call going to give me this week? Well, this week, $36. Well, let's do the math. $36. Now we divide it by the investment. 1214. That's 1,214. Okay, that comes to a grand total of 2.9% for 1 week. So think about it, 2.9% for 1 week on Macy's. This company's been over 100 years old. Now, how many movies that starred Macy's in it? Miracle on 34th Street. That's a good one. Home Alone. What else? A bunch of other ones. Ferris Bueller's Day Off. They all had Macy's in it. All right, anyway, so beside the point, 2.9%. Okay, is it a safe trade? I don't know. You need to ask yourself the question. Number one question you should ask yourself. Number one, does it make sense? Okay, if I bought Macy's tomorrow morning and paid the current going price, which is at this moment in time, $12.48, right there. Okay, if I buy it at $12.48, I turn around and I sell it to somebody else for $12.50 using a covered call or a call option. Okay, well, that call option is giving me $36 per contract. And each contract is costing me $1,000, see right here, cost of trade including commissions and fees, $1,214.66. Well, you take the investment, $1,200, and you divide it by, you take the profit and you divide it by the investment, and that gives you the rate of return. Well, this one, 2.9%. You realize 2.9%, you can double your money in what, 7 months? No, wait a minute. 8 months, 9 months, something like that. But that's not bad if you think about it. But you're going to ask that question. Do I like Macy's? Am I willing to buy Macy's and hold on to it and do a covered call every single week until it hits my target? Well, what's my target? Well, my target is $12.50. What's it at now? $12.48. Where's the risk? Seriously, Jay King, where is the risk? If I'm buying it at $12.48 and I'm selling it at $12.50 and I'm picking up 2.9% for 1 week, explain to me in a manner in which I'll understand. Now, I admit I didn't go to college, so you may have an advantage over me. But please, explain to me how buying Macy's at $12.48, selling it at $12.50, and if it doesn't fill this week, well, I can do it again next week. If it doesn't fill next week, I can do it again the next week. If it doesn't fill that week, then I can keep it. I can do it every single week until it hits my target of $12.50. Where's the risk? Please, we got, anywhere between 5,000 and 25,000 people come through this channel every night through the 9 different stations I'm on. Okay? So this is being recorded. So I'm sure people that are going to rewatch these videos are dying to know, where is the risk if I'm doing Macy's? $12.48, I sell it $12.50, I pick up 2.9% for 1 week. Explain it to me. I got all night. Anyway, let's ignore that and keep on going. Boogeyman, okay, cool. Here escapades. Oh, sorry about that. ULTY. ULTY. Let's take a look at that one. Hold on a second. Let's get rid of this while we're waiting to hear back from, what the hell his name is? The troll. Got to have enough trolls. Someone always told me, if you don't have enough trolls, you're not working hard enough. So we got troll number 1 tonight. All right, so let's get out of here. Let's go back to there. And ULTY, you say? ULTY. Ooh, no. Wasn't that quick? 3 to 4 seconds. That's all it should take. 3 to 4 seconds to take a look at any stock. Why am I saying no? Right over here. 18 July, 15 August, 17 October, 16 January. Those are months of the year. That tells me this thing does not have weekly options. Automatic no. Sorry, kiddo. You may like ULTY. I wish you the best of luck with it. I would never do it, but that's me. Okay? So what do we have over here? Mary wants to take a look at Chevron. All right, Chevron, CVX. Now, CVX is on my list. That much I do know. Ooh, nice. Look at that. Okay, high, low. Where was it? Where is it? Look at the motion. Down, up, down, up, down, up. What's going on here? 147.98. Yeah, 147.98. The 148s. What is the closest strike price to 147.98? Well, it's 148. And what is it selling for? 201. Now, is 201 more than 1% of 148? Well, yeah, it is. What's 1% of 148? 148. $148. 1% of $148 is $1.48. Well, it's offering me $2.01. Well, that's more than 148. So yeah, it's more than 1%. Where's the risk? Chevron has been around for over 100 years. Where's the risk? Please tell me. Chevron, do you think that they can go bankrupt overnight? Do you think they just disappear? Like you put an investment into Chevron and in a week later it's gone? Is it possible? Yeah, it's possible. Is it probable? Probably not. Okay? I honestly think, this is just my opinion, I could be wrong. I have been wrong once or twice. Chevron could go bankrupt in the next 2 or 3 days. It could. But usually when a company is in financial situation, the stock usually drops, not goes up. Usually. But let's keep on taking a look. All right, so let's take a look at the numbers. A year ago, 157.58. The high of the year, 169. That was the end of March. Okay, the bottom of the year, TDS day. Right here. Yep, TDS right there. 132.23. Now from there, the middle of April, she shoots up nicely, pulls back, and then rebounds. Well, why do you think that is? Okay, this is panic setting in. Okay, when Trump said we're going to have tariffs, yeah, she went from 170 and dropped like a rock to 132. Okay, well, tariffs are a good thing. Well, now it went back up again to 150. All right, well, from here to here, and then from here to here, now you get profit taking. After profit taking is done, she turns around, goes back up again. Well, let's zoom into that, and does it make sense? Well, let's take a look. Okay, here's TDS right there. Okay, high, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down. What is this doing? Up. Okay, you can see that. Okay, here's the high. It pulled back. Now it's going back up again. Now, I say this every single night. When I see a bottom, and here, I look for 2 days to the upside. On the third day, I will jump in. Okay, so bottom was here, 1 day to the upside, 2 days to the upside. So tomorrow, if this thing opens up at 147.99, I will jump in or higher. Because that's 2 days to the upside. And on the third day, that's 3 days to the upside. That's where I jump in. Okay, you can go back and look at every single one of my videos. And just to let you know, there's over 1,100 videos that I've done in the past, 15 years. So, is it going up? You got to ask yourself a question. Do I like Chevron? Am I willing to buy Chevron and hold it for as long as it takes until it hits that target? 148. Because that 147.98 now. That's 2 cents. Okay, what do we have? Another question here. Uh-oh. KG4 Love, Lull, wants to take a look at O Realty. Well, I can tell you right now, no to O Realty. But let's take it. Wait a minute. We'll look at that next, because right now Chevron actually looks halfway decent. Let's look at the last 30 days, which would be right there. Okay. So 135. Sorry, is that? Yeah, 135. Jumps up 152. That's a nice run. Okay, 135 to 152. That's 15. That's $17. Well, $17 on a $13 stock. That's what? 12%, 13% maybe from here to here. Pulls back. Now she's going back up again. But it's always, always, always going to be the exact same question. Do I like this company? Am I willing to put my own personal money into this company and hold on to it? Have I heard of it? Well, have you heard of Chevron? I don't know. You live under a rock? Chevron's all over the place. Anyway, let's do one on Chevron for the fun of it. All right, let's get rid of this. Change this to covered calls right there. The 148s right there. One contract. Right here, right there, and here's Johnny. Buy one covered call, Chevron 100s. That's the weeklies. 11 July 25. That's for next Friday. The 148 call option against the Chevron stock at the market to open to open. Again, same thing. 2 trades, stocks, options. What are we getting? Well, profit on this one is $208. My investment, $14,000. Well, what does that come to? Need a calculator for that. Maybe you should have paid attention in math class. All right, let's clear this. 208 divided by 14,592. Grand total of 1.4%. Okay, 1.4% is over 1%. Now, I told you from the very beginning, I'm looking for a safe, predictable, consistent 1%. So yeah, Chevron works for me because it's 1.4. Now, I like to diversify. It's been a long day. My idea of diversifying is getting 5 or 6 different companies. That's all I want per account. I got 7 accounts. 7 accounts, I share 3 of them publicly. So you get to see every single trade that I've made for the past 2 years. Okay? So, Yeah, NE, dude, short Macy's hard. Okay. The New England attorney says we should short Macy's hard. Macy's only value is their property. I'm going to argue with that one because Macy's name brand, just the name Macy's, has a huge amount of value. Just the name, okay? It's a worldwide name. Everybody, a lot of people know it. I can't say everybody. A lot of people know the name Macy's. You cannot buy the kind of reputation that Macy's has. Now, yeah, they have a lot of value in their real estate, but they also have a lot of value in the name itself. All right? So, he might be right. You never know. But here's the thing, Mr. Attorney. Macy's had 4 offers last year. Okay? Now, I've been trading Macy's for the past 3 or 4 years. Every single week, I get a nice premium from Macy's. All right? So, and I've seen the offers. Okay, stocks go up, they get an offer. They said no. Stocks come down, they get an offer. They said no. 4 times last year, 4 private entities offered to buy Macy's out. And corporate office said no. Okay, Mary Jean, you're welcome. Okay, so KG4LUL wants to take a look at O Realty. Now, a lot of people love O Realty, and I used to be asked often enough to know that I don't like O Realty. Well, let's take a look, and I'll tell you why. Okay. High, low, where was it? Where is it? Look at the movement. Up, down, up, down, up. Well, right here at 57.75. Well, here's why I don't like O Realty. You ready? Uh-oh. Wait a second. I got to prove I'm human over here. Every once in a while, they want me to prove that I'm human. So, anyway. All right. So, this is why I don't like O Realty. You ready? 18 July, 15 August, 19 September, 19 December, 16 January. It's monthly options. Now, a monthly option, you can only trade it once a month. So how am I going to make weekly cash flow with a company that has monthly options? Oh, yeah, that's right. I can sit in front of my computer and look at this all day. Yeah, no, thank you. Weekly options work perfectly fine for me. I get 2 criteria and only 2. It's simple. 1, consistency and profitability. 2, weekly options. Is the company profitable? Well, yeah, they probably are. But they have monthly options, so it's a no. Now, every week on Monday, we check and see how many stocks are available in the stock market. Well, every week they add more and more stocks. Well, this week, okay, there's 10,136 companies to invest in. Well, if O Realty doesn't fit, why would I even bother looking at it? Because it doesn't fit. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Those 5 lists. You can go to Google and do search. Dividend Kings list 2025. Dividend Aristocrats list 2025. And lo and behold, they will magically appear because there's somebody out there keeping track because they get paid nicely to keep track. Okay, anyway, so no to O Realty. Eric wants to take a look at Siri. Now, I actually do own some Siri at the moment. SIRI. Oh, interesting. It wasn't a definite no, wasn't it? It's interesting. High, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up. All right, we're at 23.95. Okay, 23.95. Come on, it's not that difficult. It's 24. The 24 is going for 45 cents. Well, that's over 1.5%. Quick math right off the top of my head. It's more than 1.5%. But do you like Siri? Now, Siri's not on my list, but it is on Warren Buffett's list. So I do trade it because it's on Warren Buffett's list, or it was on Warren Buffett's list. All right, so the high of the year for Siri was about a year ago, 41.60. The bottom of the year, hey, imagine that, TDS day, right there, 1851. Okay, so from TDS day, 1851, we are now at 23.95. So from 1850 to 24, that's about $6. All right, so $6 on an $18 stock, that's about 30%. But, you know, she did go up, pull back, up, pull back, up, pull back. So from here, 21 to 24, that's only $4. Well, $4 on a $20 or $21 stock is a little bit less than 20%. Well, 20%, yeah, it's going to be profit taking. But I already own Siri. So what's going to happen? Don't know. I take a look. Now, I trade my stocks on a ABC level. What do I mean by that? Well, A, what did I buy it for? B, what option did I sell against it? C, what did I collect? D, what is it at now? E, what does all that mean? What is the safest trade that I can do that will give me two outcomes? One, consistency of profitability, and two, preservation of my capital. I'm 61. I have no desire whatsoever to punch a time clock again. That means go back into the workforce, work for someone else. Now, don't get me wrong. I can just pick up the phone, make a couple phone calls, and I'll have a job. Well, I have no desire to do that. I've been working since 1973. I'm going to step aside and let the younger generation step in and earn their keep. Think about it. I've been working since 1973. Okay, let's get some of those 18, 19, 20-year-olds. Come on into the workplace. This Gen Xer is going to step down and you can take over. Nothing wrong with that. That's what happens. All right. I'm going to get my tea. Ugh, I'm not used to talking so much, so it just hurts my throat after a while. All right, so that Siri, I do own some. Now, funny thing about stocks, once they start going up, 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 and a covered call, here's the downside of a covered call. So if I bought it at 21, now it's at 24, and I sell a covered call here at 21. Well, if I want to move that strike price up, I have to pay to move it up. I don't want to do that. So at some point, it's time to let it go because it doesn't offer more money. See, I will buy it at current price 24, sell it, pick up 45. Great. Well, what happens when it keeps going up and up and up and I can't roll it and I can't make my 1%? At that time, it's time to let it go and then wait for this thing to come back down and then buy it again in a couple of weeks. Because that's all they do. Take a look. Up, down, up, down, up, down, up, down, up, down, up, down. That's all they do. You've never, ever, ever seen a stock do anything other than up, down, up, down, up, down. Well, now it's going up. What do you think's happening next? Think about it seriously. If you bought it at 21, now it's at 24. Okay? 21 to 24. That's a $3 move. Well, a $3 move on a $22 stock, because that's where the bottom is. Or 21, sorry. Okay? That's over 15% between here and here. If you bought something here and it jumped up 15%, okay, listen closely. It's not a profit until you take it. Nobody ever went broke taking profits. So if you do not take your profits and then the stocks come down, well, it's your own damn fault. It ain't a profit till you take it, and nobody ever went broke taking profits. All right, let's keep on going. Good evening from Naples. Mercer Shaw, how are you today? All right, what are we looking at? Okay, cool. We already did ULTY. Oscar Health. Okay, Michael, you got to tell me what Oscar Health's ticker symbol is. I never heard of it before. Okay, if I wanted to talk, if I gave my phone number, would you call? Jojo, I say it every single night. If you want to have a chat with me now, I need you guys to listen closely for a second. Okay, at this moment in time, as far as I know, there are about 30 people pretending to be me. So if you get an email, if you get a text, if you get a WhatsApp, if you get a telegram from me saying, I got a great thing for you. Yep, it ain't me. Seriously, I don't do WhatsApp. I don't do Telegram. I don't do any of that other stuff. I don't do cryptocurrency. I don't do Forex. I don't do what do they call those? Quick contracts, whatever that is. I don't do futures. This is all I do. This is it. You hear my voice. You hear me speaking to you. I'm actually broadcasting through 9 different channels. 9. Okay? If you want to talk to me, in the bio of each and every single channel, there is a bio. And then it has my website, The 10MinuteTrader. Okay? And my email. You can send me your phone number and I will call you. You can ask in the chat, does he really call? You'll find there's a whole bunch of people say, yeah, he really does call. Okay? And I won't pawn it off to someone else. I don't say one of my team members will call you. There is no team members. It's only me. Now, don't misinterpret this. This is not a business. This is just a hobby for me. Okay? I've been doing this for, back in the 90s I first started. Jake. Okay, Jake, 33% gain. Okay, that's lovely. Oh, let me see. What do I got here? Uh-oh, come on. Why isn't that working? That's not working. Let's try it again. Okay, Danny. Hey, James, trying your method. 7.8% over the last month. Hey, Dan, I got one of these for you. You ready? Good for you, Dan. Nicely done. Please do Starbucks. I already did that one. All right, where am I? Right, we did that one already. Delta has earnings next week. I don't know. Pfizer, Dow, you miss all the big profits with covered calls. Okay, Gamma, I need you to pay attention for a second and understand the words coming out of my mouth. You ready? I honestly don't care about the upflow. I don't. My major concern, only concern, consistency of profitability. I honestly don't care if the stock goes up. It's not what I'm looking for. I'm looking for cash flow. I'm going to say it really slow because a lot of people don't get this. I am not looking for capital appreciation. Okay? If you are looking for capital appreciation, you're in the wrong channel. You're in the wrong place. You're wasting your time here. I honestly do not care about capital appreciation. Okay? Now, those are basically stocks, companies that take all the profits, put it back into the company for capital growth. So the stock goes from 18, it goes up to 24, and it keeps on going. It's not what I'm looking for. I'm looking for cash flow. I'm looking to buy it at $23.95. I'm looking to sell it at 24. That's only 5 cents. That's all I'm looking for. I'm not looking for the 5 cents. I'm looking for the premium right there. 45 cents a share. That's all I'm looking for. Okay? Now, I know stocks go up. Some stocks go up very nicely. Not what I'm interested in. Okay? Okay? I have no desire whatsoever to change my strategy. It's been working fine for me for the last 15 years. Now, I come from an age group called the Gen Xers. Okay? If it ain't broke, don't fix it. If it's working fine, leave it alone. Okay? It's been working for me for the past 15 years. 1% every single week. That's over 50% per year. I honestly, and I don't know how to express this to you for you to understand, I honestly do not care if the stock goes up. My concern, buying it at $23.95, selling it at $24, collecting the 45 cents. Because here's the thing, stocks move 3 different directions. If I do the trade I just talked about, buy it at $23.95, sell it at 24. All right? Number 1, if it goes up, I make whatever percentage that is. Well, for the fun of it, let's figure it out. All right? Let's go take a look. Glasses. Hold on a second. Covered stock. the 24, right there. Okay, one contract, just make it easy for people. At the market, there we go, confirm and send. Calculator right there. I'm making 55 bucks off of 2,300. 55 bucks is my profit. The cost of trade plus commissions and fees, 23.45, 23.45 gives me a grand total of 2.3%. Now, listen closely. 2.3%. If I'm buying it at 23.95 and I'm selling it at 24, okay, I make 5 cents on that move. Big deal. But I'm making 2.3% on the covered call. Now, I'm not sure if you understand math, but 2.3% every single week is over 100% per year. Now, I'm not quite sure if you understand those numbers, but 100% per year is really not that bad. And Granny says, what if the price drops? Are you that? Oh, yeah, the price always drops. Okay, if the price doesn't drop, what is it going to do? It's going to go up or it's going to go down. It's a 50-50 shot. If you're worried about, okay, say I got 5 rules, okay, for my 9-year-old daughter. I'm going to see if I can explain them to you so you understand. Rule number 1, never buy a stock you do not understand. Now, what do I mean by that specifically? Because apparently you have an issue. All right, so let's go back and let me see if I can explain it to you one step at a time. Let's get rid of this. Back to where we were, right here. Okay, so let's get rid of this. Let's go back to here, here, here. All right, Granny, you ready for this? I'm really concerned about the future of our country if people have a difficult time understanding simple concepts. Okay, so here's the thing. When I say never buy a stock you do not understand, that's rule number 1. If you don't understand it, don't buy it. If you think it's going to go down, well, you're in the wrong place, because that's what stocks do. They do 2 things and only 2 things. Okay, Granny, they do not come to your house and take the dog out for a walk. They do not come to your house, rake the lawn, trim the hedges, and dump the trash. They go up, they go down. That's it. That's all. So let's take a look. Siri. Okay. The high, 42. The low, 18. Now, I'm not quite sure if you understand that, but from 42 to 18 is more than a 50% drop. So when I say never buy something you don't understand, if you take a look at Siri, you should know at the top of your head, the high of the year is 42. The low of the year is 18. That's a 50% difference. So if you buy a stock, you better be ready for it to drop 50%, and you said, oh well. Because here's the thing, and a lot of people don't understand that, so I'm going to explain it slowly so you can understand it. If I buy the stock at 42, I get a dividend. Now, if I buy the stock at 20, I get the exact same dividend. Whether or not I buy it at 20 or if I buy it at 22, I'm getting the exact same dividend. So explain to me in a manner which I'll understand, why does it really matter if the stock goes up or down? I'm creating what I call a cash flowing asset. So if I buy 1,000 shares at 42, or if I buy 1,000 shares at 22, and I'm collecting, where are we going? I'm collecting 45 cents a share. Whether I bought it at 22 or whether I bought it at 18 is irrelevant. I'm still collecting 45 cents a share. Now, I have no desire to sell it for less than I buy it for. So that's why options are a beautiful thing. Because if I collect that 45 cents a share this week, okay, well, tomorrow the option expires. Great. What am I looking at? What did I buy it for? What option did I sell? What did I collect? Where's it at now? What does that mean? What do I do to avoid losing money and continuously increasing my cash flow every week. Okay, now, does that make sense? Okay, so yeah, stocks go up, stocks go down. Rule number one, never buy something you don't want to own and you're okay with it moving whatever it does. You should always understand what you are buying and the risks involved. If you buy a stock, get ready for it to drop 50%. Get ready for it to jump 50% or 100% or whatever. Because stocks go up, stocks go down. That's all they do. They do not go sideways. They do not come to your house and take the dog for a walk, make the bed, put the little candies on the pillows. Nope, they go up, they go down. That's it, that's all. If you're not okay with it, you shouldn't be playing this game. Sorry. Sorry for my bluntness. It is what it is. That's another one of those famous sayings. Famous sayings we Gen Xers like. It is what it is. Because it is. It goes up, it goes down. That's all it does. If you're expecting a stock to do something other than go up and go down, and you think just because you buy it, it should go up and not go down, yeah, you're in the wrong place. All right, so let's keep on going. What else do we have? Hey, Mr. Nice Guy's here. All right, where did we go? Where are we? Oscar Health. Okay, Michael, I told you, Oscar Health, I have no idea who they are. You got to give me the ticker symbol so I can understand who it is. Now, Chandler, BCAT. What the hell is BCAT? Seriously, what is it? Never heard of it. Now, I've been doing this long enough. I know off the top of my head, a lot of these companies, BCAT, that are consistently profitable. Well, this one has no options. Hell no. That was quick, wasn't it? Eric, STZ. I did STZ today also. STZ. Okay, so here's STZ. Same thing. If you're not okay, 260, well, now it's down to 160. If you're not okay with that, you shouldn't be playing this game. If you buy 100 shares, regardless of what price you pay, you still have an opportunity to collect a premium every single week. But you got to be leery on which options you sell. Okay? You always got dollar cost averaging. You got dividends. You got premiums. You got a lot of things you can do. All right. Anyway, STZ. All right. So the high of the year, 260. The low of the year, 160. Let's take a look at the numbers, especially right down here. Look at this. Last 30 days. There you go. Now, last 30 days. 30 days ago, we're at 178. Back down to a little bit below 160. Now we're back up to 173. What do you think? Does it sound like a good opportunity? Well, here's your bottom right here. 2 days up, it pulled back. 2 days up, here's day 3 right here. So normally I would have jumped into this one today. Not tomorrow, because you missed this opportunity. Bottom was here is 160. Now it's a 173, which is a $14 increase. $14 increase on a $160 stock. What is that? 85%? No, not 85%. 8.5. 8.5%. Just below 10%. Here to here. Could it keep going up? Yeah, it could. Not something I want to do, but it's up to you. All right, STZ. Unless you're doing this in an IRA. Okay, say Boogeyman, you really need to talk to a tax strategist. Okay, if you worry about the IRA thing. Mr. Nice Guy, please look up stock WD40, WDFC. What the heck is that? I don't know if I ever traded that one. WDFC. Nope. Sorry, dude. 18 July, 15 August, 21 November. No, and no. Sorry. Peter, just one question. Are you a millionaire? I could ask you a question too, but you feel very uncomfortable with the questions I asked. Enron, you like Pfizer and Dow these days. All right, PFE. Oh, ooh, nice. However, I wouldn't do it. Here's DTS right here, TDS. Right? 21. Now it's at 25. It's only a $4 move. All right. Up, down, up, down, up. Where's it going next? I don't buy at the 30-day high. That's where it's at now. See? I wouldn't buy that one. That's me. I don't give advice. I don't give tips. I don't tell you what to do. All right. And Dow, D-O-W. Interesting. Ooh, I like this one. Highs at 55, bottoms at 25. That's a 50% drop. If you're not okay with a 50% drop, you shouldn't be buying Dow. Because could it drop another 50%? Yes, it could. Is it going to? Don't know. Do you like the company? Do you like the company at this current price? Are you willing to buy it and hold it till it hits your target? Well, right now it's at 28.73. So 28.73, I'll be looking at the 29s, and it's paying 60 cents a share, 61 cents a share. That's over 2%. Well, do you like Dow at 2%? Are you willing to buy it and hold on to it until it hits your target? Well, if I'm buying it at 28.73, my target's going to be 29. Well, look at the 1-year chart. The high's 55, the bottom is 25. Well, I'm buying it at 28.73. I'm looking to sell the 29s. Hell yeah. Well, let's do one on Dow right now, because that looks pretty cool. Okay. Oh, let's do that thing. Hold on a second. High, low, was, is. Look at this. Sideways, down, sideways. That's about it. Sideways, down, sideways. Okay, anyway. 28.73. Covered call. 28 to 29 is right there. And one contract right there. Market order. There we go. And here's Johnny. Buy one covered call of Dow. 100's the weeklies. 11 July 25. That's next Friday. The $29 call option against the stock at the market to open. 2 trades. 28.85 is the current price right now. Am I willing to buy it at 28.85 and hold it for as long as it takes to hit 29? Hell yeah. I like Dow. Why the hell not? All right, so profit, $90. What is it costing me? Cost of trade, including commissions and fees, $28.10. All right, well, let's take a look. Calculator, here we go. Get rid of that. $90 divided by 28.10. That's a grand total of 3.2. 3.2 for 1 week. Now, if 1% equals 1% a week equals 50% a year, what does 3% equal? That's got to be at least 150%. Hold on, let's do the math. Multiply that by 52. Why? Because there's 52 weeks in the year. Comes grand total up 166. Ooh, that's nice. You could double your money in what? 8 months, 9 months? That'd be awesome. All right, anyway, let's keep on going. Let's keep on keeping on. It's got to make the best of. All right, here we go. Oh, no, single. Back to where we were. Jolly good. All right, so that's that. All right, we got 10 minutes left, 11 o'clock. I'm out of here. I got to jump on an airplane at 4 o'clock in the morning, head on up to Maine, hang out with my high school buddies. Haven't seen them in a while. All 4 of us haven't been. Now, there used to be more of us. You're going to find this as you get older, okay? The kids used to hang out in high school. Yeah, the numbers get smaller and smaller the older you get. So there's 4 of us. We're going to go up to Maine, hang out in the cabin, and just chill. No women, no running water, no electricity. Awesome. There is water and electricity. I just say that. All right. Good evening from Naples. Did that one. ESQ. RAG. What the heck is ESQ? Safe travels and enjoy your time. Wait, thank you, Shell. ESQ. What is ESQ? ESQ. Hell no. 2 reasons. Okay? It's at the high of the year. Yeah. No, thank you. No option. Yeah. No, thank you. Sorry. ESQ's a no, rag. Okay. What do we got? Odin. Not Mario. ITG. The silver guy. Delta has earnings next week. I don't know. Gamma. Yep. Gamma, we already talked about that. Check out Target. We don't have enough time for that. I got like 44 questions I got to take a look at. All right. Michelle, if you have to exercise the option and then it retraces for a month, you are stuck. Michael, explain to me specifically what you're talking about. Okay, so I'm reading what you're saying, but it's not making sense. Okay? Because what you're saying is if you have to exercise the option, I'm selling options. I don't exercise options. People exercise them against me. And then it retraces for a month, you are stuck. Not necessarily so. Because you're on, from what you're saying, it's not making sense. Because you're talking for a month. Well, I trade on a weekly basis. Buy on Monday, I like to get rid of it on Friday. Okay, that's why I like looking at the 30-day chart. The 30-day chart gives me a good idea where it's going next. Now this one, it looks like it can continue to go up until it turns around. Because that's what stocks do. They go up until they're done going up. And who decides that? You and I. Okay, we are the buyers, we are the sellers. So we say, well, it's not worth 100. Or is it worth 100? That's us. We decide. We're the buyers, we're the sellers. The market maker just comes in, draws a line in the sand, and says, hit that starting buzzer and says, go, or the starting bell. Go. So whatever the market maker opens it up tomorrow, that's our starting point. We're either going to buy it or we're going to sell it. Because the low right here, 89, now it's at 99, that's $10. That's over 10%. So are they going to sell, take that profit? Because if you don't take that profit, it just might disappear on you. Let's see, what else do we got? Dorothy. To that purchase of Macy stock, Robinhood or something like that, there was a bit of just a badge U. I have no idea what that means, Dorothy. That sounds more of a statement, not a question. Edwin, AEBI, we'll have to look at it another day. What if the stock drops? Well, granny, all stocks drop. Just all depends on where are you in that scenario. Okay, so if I buy a stock, what price did I buy it at? If I sell a covered call, what did I sell it for? The premium, what did I collect? Well, if I jump in on a Monday, which I usually do, I usually buy all my stocks on a Monday, and then Tuesday, Wednesday, and Thursday, I look at what it's doing. Friday, I decide, what did I buy it for? What did I sell? What did I collect? Where's it at now? What does that mean? What do I do now? I got two goals. One, consistency of profitability, and two, preservation of my capital. With those two goals in mind, I always have an idea, or I always have an answer of what I want to do next. If the stock drops, well, maybe I will buy some more and lower my cost basis. If the stock drops, maybe I'll decrease my strike price to get cash flow coming in, but be far enough away to not be at risk. There's always an answer. Okay, Sean, CWX, we're going to have to take a look at it another day. Because I'm out of here in about 6 minutes. That's a no. Hey, 110 Beast. How are you doing, brother? Haven't seen you all day today or yesterday. You weren't here yesterday. Mr. Nice Guy, do you have a favorite sector of stocks you like to invest in? Okay, Mr. Nice Guy, you've been here long enough. Really, you have. Let me briefly show you what I look at. Okay, now, do you see this right here? This is an EX dividend calendar. Now, I have a whole bunch of lists. The list that's here at the moment is companies that have 25 years of increased profits. Great. Well, ESS, ITW, NUE, APD, CAH, FRT, O, and GD. I honestly don't care what they do. Honestly, I don't. I don't care if it's transportation, oil, hospitality, dry goods. I honestly don't care. Seriously. Are they profitable? Yes. Do they consistently increase their dividends to the shareholders? Yes. Because if they didn't, they wouldn't be on this list. Because this is my personal list. Okay? They are profitable. I don't care what they do. They're having the dividend first week of July. Argue all you want. That's what it is. Second week of July, these companies. Third week of July, these companies. Fourth week of July, these companies. I don't care what they do. My concern, are they consistently profitable? And do they have weekly options? Don't have a sector. Sorry. Do you feel lucky? Booyah. Miss your taps. Miss things. Please do Starbucks. We already did Starbucks earlier. What you do if Chevron goes to 145 next week? Okay. If Chevron goes to 145 next week, I stop for a second and say, okay, what did I buy it for? What option did I sell? How much money did I collect? What's it at now? What does that mean? What do I do to not lose money and still have cash flow coming in? That's what I do. Can't answer the questions of Friday with the information we possess on a Wednesday. Okay? Clorox. Ooh, Mr. Nice Guy. I like Clorox. I think it's a monthly, so it would be a no. AWCO3. It all makes sense to me. You did that sense thing on purpose, didn't you? Well, I have it up there for a reason, to see who's paying attention. Does it make sense? DVN looking good for next week. Yes, it does. I actually have some DVN. The B guy, thank you for that. Neochromium. We have a Macy's bag come in the mail every week. Jake, 33% gain. I have no idea what that means, Jake. I mean, I know what it means, but what are we talking about? Mr. Paris, how are you today? Adrian, how are you doing? Crypto Psycho, Dan E. Hey, James, trying your method, 7.8% over the last month. Thank you. Dan, you get one of those too. Awesome. Good to hear it. Sam, no, I don't do futures. I did futures years ago. I don't do it anymore. Allie, YMAX. Well, where did it go? Uh-oh. I missed it. I moved too much. Uh-oh. All right, here we go. All right, back to where we were. Dan E, there we go. Futures, nope. Okay, Allie, YMAX. YMAX doesn't have the dividends I'm looking for. So it's going to be a no. Lisa B, how are you today? Tove, George, what's going on? Brian, how long have these progressively raised the dividend? Well, these companies right here, 25 years. Every single year, 25 years, higher and higher. I collect dividends and my covered call get exercised. Do I lose the dividend I collected? Well, did you read what you just said? If I collect the dividend, that means you've already collected the dividend, and my covered call gets exercised, is that before or after you collected the dividend? Do I lose the dividend? Well, see, here's the thing. When you own the stock, you own it, and if you own the stock on the date of record, there's 4 dates to remember when it comes to dividend stocks. Date number 1 is the announcement date. Hey everybody, this is James from Dividend Stock Talk. We had such a great year. We made so much money. You're going to get your share on this day, and this is how much you're going to get. It's the announcement date. They tell you how much profit they made, and they tell you how much you're going to get. Okay, that's the announcement date. Date number 2. Yeah, baby, in the house. How's it going, brother? Date number 2 is the EX dividend date. They are represented by these little green dots. Each one of these green dots is an EX date for each one of these companies. EX date is the last day the stock trades before the dividend is paid out. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. So date number 4 is the payment date when you get your money. So what you said kind of makes sense, but doesn't make sense. If I collect the dividends, that means you've already collected them, and my covered call gets exercised, I'm assuming that's after you've collected the dividends, do I lose the dividends? No. If you own the dividend on the date, the dividend stock on the date of record, you get the dividend. If somebody exercises their option before the EX dividend date or the date of record, they get the dividend. So whoever owns the stock on the date of record is entitled to that dividend. Hope that makes sense. It's past 11. I should be out of here, so let me get a couple more of these questions done. Jojo, how to be away a second? If I leave my number, would you call me? Yeah, Jojo, in the top left corner, okay, top left corner, you see my little picture that says Dividend Stock Talk. You click on that, you send me a DM with your number, I will give you a buzz. Now, I'm going to be traveling tomorrow, so I'll do the best to give you a buzz in the meantime while I'm traveling, okay? Yeah, Brian, send him a private message. He's very informative. Yeah, I had a conversation with Brian. Mr. Nice Guy, how often do you roll a covered call up? Usually never. Okay, there's 3 ways of rolling an option. Rolling it sideways, 98% of the time I do that. Rolling it down or rolling it up. Each one has its risks. Each one has its rewards. What stock is this? We're not looking at a stock at the moment. Sorry. They also pay dividends. Okay, 110 Beast. I have no idea what we're talking about, but okay. Some, okay. All right. Gen Xer, hey, how you doing? No, 20 is 40. I have no idea what that means. Or 120. Now 24. 96 is mine. All right. All right. What stock? Blah, 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 blah. If your stock goes down, you will just redo another covered call. Absolutely. But if the stock goes down, we do another covered call. But it's very important to weigh the pros and cons of whatever option you sell. I'll give you an example. If I buy something at 135, okay, first I'm going to sell an option at 135. Now let's say the stock drops to 125. Well, I'm not going to sell the 125 because that's too close to where the money is. So if it drops to 125, maybe I'll do the 128 or the 130. Now I might not get 1%, but I'll have some cash flow coming in, and it'll be far enough away from the current price that is a little bit of safety. And as the stock, if the stock goes back up again, well, then I will roll it forward. And it's always going to be, what did I pay for it? What did I collect? What's it at now? What do I do? Okay, there's always a way out of everything. 110 Beast, OSCR is a no, hasn't been around 20 years. Thank you, 110 Beast. The Schmitz, NNMD, never heard of it. And we're past 11, so I'm out of here very shortly. So 24% is yours from the 120. Okay. CAJ Mike. Hey, Mike and Hart. Gotta love it. ABD. Isn't that Abdi? Adobe. ADB is Adobe. Cookster. Coreware. Okay, I'm not looking at anything else for the rest of the evening. I'm just answering questions because it's past 11 o'clock and I got to get up at 4 to catch a flight. So let's keep on going. Broke English. So you made 80,000 more from 120 than to 96 is mine. So you make 20 more than you can get 4%. Okay, great. Wonderful. Alex Ford. We'll have to take a look at it next time. Headed to the mountains. No water, no power. Enjoy. Hey, keeps the women away. Like, because when a bunch of guys get together, it's always best not to have women around because they really don't, most of them don't like roughing it. All right? Have a great weekend. Thanks for the instructions. Lloyd, you're welcome. Safe travels. Thank you, Tom. So in 3 months, it's 4,000 hours. Yep, Ford. Enjoy your time with your buddies. Please, Ford. Alex, we'll have to look at it another time. Brian, I can't get my screen to look like yours. My option chain and chart, I can't get on the same screen. All right, Brian, when I get back next week, maybe we'll do a private Zoom call. Help you out with that one. Danny, Kev, I'm learned here. I don't sell at a loss. Continued premiums. Thank you. Crossroads. So you first sell a put on Monday. Nope. Nope. Where do we find that kind of calendar? Okay, Crossroads. This calendar is called an EX dividend calendar. Google EX dividend calendar. Hit the send button. You'll find a whole bunch of them. There's a bunch of them out there. SoFi, no. How do you go to the screen with the dividend payment dates? Ooh, good question. Oh, I'm done. All right. Hey, bro, please give me a car name for edit. Gaylord. That's a car name. Car name is Gaylord. Anyway, all right, so I'm done with the questions here. Hey, I just found your channel. Tupac, Cool Beans, Mr. Fett. Hey, brother, my phone died. Still need that. Okay. Hello. Would you know a better molecular packaging solution for a 166 bore pipe bomb? Yeah. Don't do that. Ain't funny. Can you? Okay, no, you're going to do that. All right. Can't do that. All right. See, I really need to get, I'm not going to answer the questions on YouTube. I really, really need to get a moderator on YouTube. Some of the stuff you guys are saying here is just ridiculous. I'm not even going to bother with it. All right. That being said, we're past 11 o'clock. You guys have a great night. Now, for you guys over here on Zoom, all right, we will be live tomorrow as soon as I land in Maine, because the market's supposed to be closing at 1 o'clock from what I understand tomorrow. So we'll be doing that tomorrow. So you guys have a great night, and we'll see you all tomorrow. All right, done over here. You guys have a great day over here on YouTube. You guys have a great day on Instagram. I'll see you later. You guys over here on TikTok, have a lovely day. And we'll see you all tomorrow. I love ya tomorrow. You're always